Well, hello everyone. Welcome out to another segment of the State of the Industry Report. I am here with Mr. Dan Gordon as usual. We
Hello,
have
everyone.
a special guest with us today, which we will introduce a little bit later on, but it's Brian Olson, and we're going to talk a little bit more about his business as we get going a little bit later on. But, we thought, Dan, that we would start this webinar with kind of a quick hack on where things are at and how things are going. When we initially started this webinar, we were specifically talking about COVID-19, and we were pretty much going weekly there for a while, and then we decided that, well, maybe we should extend it out because things seem to be slowing down, but not so much anymore. Kind of what I'm seeing is that, I don't know about you, but personally, when this all kicked off, I thought, oh, this will be a week, 2 weeks, maybe a month, and here we are 4 months later. And,
yeah, it's making its way around the country. I live in New Jersey, and that's where ground zero was, and now we're okay, and the rest of the country is getting it, and so it'll be interesting to see how, what happens 3 months from now, 6 months from now, a year from now.
And I think the thing that we're seeing too is like, before it was like, hey, we can handle all this, no big deal. I think now we're kind of starting to see the bigger impacts of this, and so. I thought we'd start kind of like what we have done in our past webinars, where we'd kind of start big picture with the economy and then bring it back down to kind of our industry. And I thought it'd be nice to start with these two graphs. And Dan, I think this was a record, right? I don't know that the GDP has ever dropped, which, I mean, you can't just stop the economy and like expect to continue to produce. But when they released the July numbers, down 32.9. It's crazy and insane. I've never seen anything quite that.
When you look at these two graphs, this is the definition of divergence. The economy is going down and the stock market is going up, and it's nobody can explain why the stock market's going up. One of the things that the stock market is going up, that's your averages, and your averages are built on certain stocks like your Amazons and your Apples that have a huge impact on those averages, and any other stock that stay-at-home stock that's doing well. So a lot of that's doing well, but a lot of the small caps and whatnot are lagging. What's really interesting, though, is Rollins, somebody from our industry, they have hit an all-time high almost every day last week. Their earnings are just incredible, and their multiple is approaching 8 times revenue, Donnie. 8 times revenue.
That's crazy.
Yeah.
I also read an article just this morning talking about, oddly enough, the U.S. savings rate is as high as it's ever been. Like a lot of consumers are sitting on a ton of cash right now.
Yeah.
So it's just an interesting time. We have a lot of negative indicators, but you can see here the stock market, you can obviously see back in March where it kind of took a big dip just as this kicked off, but it is for the most part pretty well recovered, even though as an economy, we are not doing so well in terms of production. Now, this is a great graph. If you take a look at this, and I'm not going to spend too much time on this, but this just shows federal spending. And I thought I would show this because, Dan, I think you and I are going to talk about this here in a moment. But if you take a look at the red lines here on this graph, this is government spending. And take a look at April, May and June,
right?
Almost triple of what it typically is. And, obviously from 2019. And this graph is interesting in of itself, but let's take a look at the next one, which is revenue. Right, so here we have essentially we're spending almost 3 times of what we normally spend, and then if you take a look at April, this is an actual revenue graph of the government. Yeah, this is when all the tax income comes in,
so
and we're not taking in any money.
Yeah, if the government were a business, they'd be out of business. So what's holding us up?
Yeah, well, I mean that's the thing, right? So let's go and spend out triple and then cut our revenue stream in half. That's a great business strategy, right? So only the government can get away with this, but it just paints a picture, right? And the picture really is kind of, the effect that this is having on the economy and the dollar, right? As of right now, we're 4 months in. I don't know about you, Dan, but for me personally, I think the fundamentals still look pretty good. I am concerned about this continuing to go on. I don't know that I have a date in sight for the end. And it's having a bit of an impact on the dollar. That's kind of what this graph here is showing. it's not gross yet. The good thing I think about this virus is that it is a global virus. If this would be happening just in the U.S. economy and the global economy was still just cooking along like it was before, I think we'd be in big trouble. Luckily,
Well,
and
the
I don't know
weaker
if I should say
dollar
lucky
is
not.
providing higher stock values, which
Mm-hmm.
are artificially, because the stock last week was $10, this week it's $12. Oh boy, it's going up, but in real dollar terms, we'll see what happens. And as
Yep.
far as it, as long as the government keeps pumping money into the economy, we're all okay. But when they stop, and even though we're an essential service, this is terrific, right? We're an essential service, everybody's spending money. But if they stop, if our customers stop spending money because government stimulus stops and people have lost, the unemployment rate's over 10%, and that can have a profound effect on us, but we'll see. But our industry is extremely resilient. I mean, in 2008 and 2009, we had a very high unemployment rate, came right back, and so don't count us out, Um,
And that's a very good point, Dan. And this is kind of our next point that we're going to make. The fact is that the stimulus seems to be working so far, and there's a new, as of this weekend, right? There were some new developments as far as another round of stimulus that's coming. I know this is going to be shocking to everyone, but there's a lot of debate, a lot of argument going on right now in Washington D.C. about what should be the next stimulus round. And I know the Republicans and Democrats have had their own plans, but this past weekend, President Trump kind of did some executive orders
so
of his own. So
it's not a political statement, but we should vote every member of Congress out. I mean, they cannot get it together, right? And the president, while he, he's trying to get things done. I think that his executive orders are going to be tried in court, and it's going to be a problem and whatnot. But the first thing that he wanted to do was to delay the payroll tax collections for those making under $104,000. That may seem like a good thing, and it is a good thing if you're making under $104,000 and your payroll taxes, as an employer, will be due next year. The problem is that the people who need the money are the unemployed, so they're not paying payroll taxes anyway, right? So I think that was a highly political move. The other thing that I don't think was a political move, which I thought was pretty good, was the Democrats want to keep the $600 unemployment benefit federally. Now, obviously, that's on top of whatever your state is giving you. And the Republicans wanted to move to $200 because, if you give people too much money on unemployment, they don't want to come back to work, and that's the argument. So what the president did is he kind of, in his executive order, he pushed it to $400. He just cut it right in half, and we'll see when Congress gets back and that they what they're able to come up with. But the other thing is, not much was done for renters. Okay, so that's going to be a problem. And again, there's only so much the president can do through executive order, right? Because
right.
everything that he does is going to be tried in court, and so that's going to delay it, and so it's going to render it ineffective, right? But he also said that student loan payments are deferred till the end of the year. So if you've got a student loan, so those are the things that are happening now. Some of the things that are being debated that that they will have to figure out is there's going to be probably another round of PPP, but this time it's not just going to go to the people who don't need it. It's going to go to, they're going to actually say, if your revenue drops, what a novel idea, right? Then you're going to be, and so most of our clients in our industry right now won't qualify for a second round of PPP.
And I think that's a great point. I mean, for me, when I look at and I think about this, I don't think this is dead. I think they're probably I think this is more of a posturing move. I think it'll go back. I think
Absolutely.
Republicans and Democrats will figure something out, and we'll see a real package come down. Because the reality of it is that both of them stand to lose quite a bit if they can't figure it out, right?
That's right.
Because the time has passed, and hey, both of them are going to suffer. And I think in that case, that means something will actually get done. At least I hope.
Yep.
So, kind of transitioning gears here, how is this impacting our industry? I got a couple of graphs up here, and I know if some folks are listening, you can't see the graphs, but I went through and looked at pest control, and what you're looking at here is an actual search volume. This is for the term pest control as well as for mosquito control. And what you'll see is we had a really strong spring and a really strong start of the summer, but overall pest control, this is not really significant. There's not much change. 2020 is still stronger, and I think for our clients, I would say the majority of our clients are doing really well in pest control this year. But mosquito control has been kind of a different story. We've seen a slide since the spring, and as of last week, it's actually lower, a bit lower than it was in 2019. And this graph here, it shows it a bit higher in terms of search volume, but I'll get into some different numbers a little bit later on that can explain that a little bit better. And then same thing for termite control. Termite control is down over last year. Big picture, again, these numbers aren't huge. And bedbug control has consistently been down since all of this started. And that kind of makes sense, right? I mean, a lot of folks are, they're not traveling as much. It's not like bedbugs have gone away. I just think the transfer rate has probably slowed quite a bit, and we're seeing this in what folks are searching. And on termite control, I think just a lot of folks are sitting on a ton of cash and are not very interested in making big purchases. Pest control is usually a small.
Yeah, I think termite control, this could not have come at a worse time for the subterranean termites, right? Because the COVID hit right when the swarm season happened. So people got scared, and that swarm season, I think, is gone.
And then, kind of transitioning, so that's kind of the big picture of what we're seeing in terms of demand. Taking a look at Coalmarch clients specifically, and we have clients all over the U.S., and so I feel like we have a really good handle on what's really happening in the industry. It's been super positive this year. 41%. It's been a 41% increase in leads overall for our entire client base, and most of our customers are really ramping up their Google ad spend. This is probably a result of two things, really, and this is for the month of July. Number one is a lot of companies transitioned to digital this year, and so it's much more competitive than what it's been. The second one is that pest control has just been so good. A lot of folks have been upping their budgets and really taking advantage of the demand in pest control to try to offset some of the lost revenue in some of these bigger revenue categories. And then, overall paid conversion is down. I would suspect, again, that's not a significant number per se. I would suspect this has a lot to do with just the amount of competitors that are jumping in now on Google Ads. And so, I would say overall, our clients and our industry in general is doing pretty well on the digital side. We're not really seeing, all of our clients are, they're all growing their leads online. I can't speak necessarily for revenue because depending on what kind of company they were before and what they were into, but for those that were, pretty much digital before COVID, and now, now that we're into COVID and they're digital now, they're doing quite well. In fact, I think if you just kind of stripped away all exterior knowledge of what's happening as far as COVID is concerned, you would even know that there was a pandemic going on. But we also are seeing, I think probably as a result maybe of this PPP money, a lot more companies are starting to invest in infrastructure. And I'm not just talking about, things that you would think about like buildings, but, like technical infrastructure, call systems, just the technology really. And so I think overall, this is a pretty rosy picture for our industry. So Dan, what about you guys over at PCO? What are you seeing?
So we're seeing really, if you are heavily involved in hospitality or whatnot, those numbers are coming down because those businesses are closed. If you were in the Northeast, your April-May revenue was down, but what's really neat is it's bounced back and it's come back. And most of our clients are net positive for the year in terms of revenue. Those that were heavily involved, like as I said, in hospitality, they're trying to reevaluate. But just in general, commercial, a lot of our commercial clients pivoted to viricides and other things to help with the virus. And thank goodness, this industry, it just keeps going. And I've got friends in other industries, and it's not as rosy in those industries. So,
right, I would agree with that. And same thing for Triangle. We kind of did a quick pivot there. When we saw our bed bug going down, and we realized that COVID was going to be around for a while, we're like, hey, we're going to do some some of this disinfecting services as well. And so I agree with you on that one. What about the M&A side, Dan? What's happening there?
Kind of interesting. So we, right before COVID hit, or as it was kind of building to where the country shut down, we had several deals that were on the docket and were ready to close. They were through due diligence, and the plug was pulled. Anticimex, Rentokil, Terminex really kind of, fell off a cliff in terms of their activity. We did close 3 deals though during COVID with Certus, which is a private equity owned firm, and now the offers are the bids are coming back from the Anticimex and the Rentokil, and so they're getting back into it. Multiples, obviously. When you're a seller, you try to get as much as you can. When you're a buyer, you try to get it as cheap as you can, and so there's a bit of horse trading that's going on. But I see the multiples not too far from where we were. I mean, we're going to be in good shape. Where we may have a problem is stock market drops, alternative assets drop, real estate drops if people stop spending money, so that all asset classes fall. So as you can see, the stock market's going up right now, real estate's going up, pest control company prices are going up, and I don't mean the services, I mean the value. So I think that we're in a good groove right now. Hopefully it stays there, but we'll see.
So just to kind of recap, I mean, and I agree with you on this one, Dan. I think so long as Rollins and some of these other publicly traded stocks, as long as they continue to stay high, then multiples largely should be pretty unaffected, right? I mean, we shouldn't see a lot of change.
So Rollins is probably the most disciplined of all of the big boys, and that's probably why their stock is so high in terms of multiple of earnings, multiple of revenues. So they're going to be in the game no matter what.
Right.
The Service Master, they had some big issues happen to them in October, and their stock took a real nosedive, and now it's starting to come back, and the analysts are starting to like it, and just because of the recurring nature, and they're also going to get rid of their brands business, and so that might be an interesting one, but I think that as long as the industry's healthy, I don't know that the multiples on the public companies they're an indicator of what value will be, but it's not an indicator of what you're going to get. In other words, Rollins selling at 8 doesn't mean you're going to get an 8. Okay.
Right. It's correlation, not causation. Yeah. It's correlation, not causation. I 100% agree with that. 100% agree with that. So if we just kind of had to, kind of take a quick snapshot, and again, this is an update. What are you thinking of? I mean, for me personally, this PPP program, the CARES Act, has been really positive for our pest control business. I mean, it certainly has. I'm sure you're probably seeing it as well, right?
Well, I think one of the things that obviously, anybody qualified for it, so everybody did, and everybody got it. And the tough thing is that we have our clients. We probably have close to 100 people who have asked us to help with the forgiveness application. And everybody just wants to get it done, tick it off their checklist and get it gone. But the issue is that the government they're still doing a little horse trading back and forth and haven't told the banks exactly what they want. We've got the application, we're doing the analysis, but the 8 weeks went to 24 weeks, but you have the option of keeping the 8 weeks if you receive the loan before a certain time. So we're going to be starting those forgiveness applications pretty soon as we get some absolute clarity, but the banks aren't even accepting them just yet. So sit tight and that's all going to happen.
It's funny, I get emails from my bank all the time. We're working, basically the same thing. They got no clarity. So they to their credit, they send out hey, we're still working on it, but they've not done anything. And so Dan, I don't even know why I'm even putting this on here. I don't even know why I should even talk about it, because I have a horrible track record in predicting what's going to happen with COVID. I have missed every single time I've said something like, hey, this is going to be a month or it's going to be 2 months. And so any idea on where this is going? I know for me personally, I think a lot of folks are the same way. Most folks are not making really large moves until there's some sort of clarity of a timeline, right? When we're going to kind of start getting back to normal. Any thoughts? I mean, go ahead and whip out your crystal
So,
ball here, and
so,
let's
so
let's
without
hear what
being
you
a
got.
real without being a real downer, I read a very interesting article over the weekend. So this thing is going to end in one of two ways. Like, just because we're out there trying to get a vaccine doesn't mean we're going to get one or one that works, right? I mean, I don't think that they ever got a vaccine for AIDS, right? It's just a therapy treatment, right? So we don't know whether it's going to be cured, but we do know that it'll make its run through the population. And the article was about the Spanish flu, which killed like 50 million people worldwide, I think like 700,000 in the United States. And that was, probably 100 years ago. Okay. But what happened after that, and it just made its way through the population, and that, I guess, listen, if you don't survive it, then you don't have to worry about this conversation. But if you do survive it, the we the roaring 20s came in. That was before the Great Depression, right? That was another period of tremendous prosperity, and that's what happened. It
Mm-hmm.
was all the pent up demand and all of the so my guess is, however it ends, and it will, because we always get through everything, you're going to be on the way to economic prosperity again.
Yeah. So it sounds like you're not gonna go over on the timeline side of it either. I don't think anyone knows. I don't think I will say this. I initially thought this was going to be pretty short-lived. I am now nowhere near that. I'm thinking we're in for the long haul. I just don't see it going away anytime soon.
The one thing that I would tell you is I have a good friend of mine who works for a large pharma company, and I was at a barbecue the other night, and he's working really hard, and when I asked him what he's working hard on, and what he said is they are ramping up manufacturing. They are ramping up their whole manufacturing operation. I said, well, you don't have a vaccine, you don't have a cure. What are you going to manufacture? He said, it doesn't matter. Once they get it, we just plug it right in, and we should be able to do 200 million doses in no time flat. And that was one of the pharma companies. And he said, there's two or three other pharma companies that are doing the same thing. So if and when they get something through, it's going to be quick. So.
Nice, very nice. Well, it's I think that's our update, and Dan, I'm super excited about today's webinar. We're doing something a little different, something that we've never done together before. We've brought on such a great guest, Brian Olson, owner of the Bugman, and we're going to talk a little bit about growing your business. We've talked about growing your company in the past, but today's going to be a little different, right? And how it's going to be different is we're going to talk about those companies out there who are bootstrapping their growth, right? These are folks who may not have private equity behind them. They may not have a big war chest of cash, and so they're having to fund their own growth. And so what we're going to do is we're going to talk about growing your business a little backwards. And what I mean by that is that, I think now and Dan, you're more welcome to disagree with me. I think one of the best ways to grow your business is through profit and being super efficient and funding your growth with the extra money that you make in addition to the money that you take, right? So the whole idea is that, hey, I've got a business, it has great margins, I take a little piece of the margin, I take the rest of the margin, I reinvest it back into the company, and that's what I grow the business with, right? And so
You'll always own your own business, and you'll never be beholden to the bank or creditors or other
exactly right.
private equity people that invest in your business. And so that is the best way to do it.
Yep. And I'm not saying there's anything wrong with doing it the other way. It's just my methodology. It's the way I do things. And so today it's all about the whole idea behind this is that, if you're going to fund your own growth, how do you maximize your profit to maximize that investment income? And we have a great story. Today's almost like a case study, and it's why we invited Brian. I think he has an amazing story. I think a lot of our listeners and the people who are watching the webinar are really going to resonate with his story because it's such an amazing story. But having said all of that, I want to open this up with this single question to you, Dan, and I'm going to play Stump Dan here for a moment. And the question is this: what is the largest lever in creating profit? Now, not just pest control, but in any service company. As an accountant, as a bookkeeper, as a world famous industry expert, Dan Gordon, what would you say is the largest lever?
So you want to manage your labor. I mean, labor is your largest cost. But before we do that, let's go to the next slide and talk about Brian for a minute, or did I miss that slide? Yeah, I did.
He's coming
So,
up.
oh,
Yep.
okay, okay. So, largest wave. Oh, look, I got it right.
Yeah, you did. I
Right.
didn't have a
And
bell. If I had a bell, I'd ring it. But that's 100%
that's right.
correct. Absolutely.
And
Yep. Yep.
also about keeping your cost per sale to a reasonable amount, which is efficient sales.
Right.
And
No,
you know,
and then that's again, and I think that's a good way to open this up because I think, anytime someone is looking at trying to grow their business and they want to understand how can they bootstrap it on their own, how do I keep away from banks? How do I keep away from getting myself and digging myself into a hole? It really is about managing my payroll, which is really gross margin, which we're going to talk about here in a moment, and also managing how well I'm able to generate efficient sales. And so anyway, profitability through efficiency, that's where we go with this. And having said that, I'm super excited about today, right? Because today it's not going to be generalities. We're not going to get into, um, you know, overtures. This is going to be in the dirt, in the details, and a case study of what actually happened with Brian, who is actually he's a client of both PCO and Coalmarch. And so I talked with Brian about this idea earlier, and he was open to it. I think it's great that he's going to open up a little bit about his situation. And with that, Dan, do you want to introduce our guest, Mr. Brian
sure.
Olson?
Yeah. So we've been courting Brian as a client probably for 7 or 8 years. Our salesperson has been emailing, calling, doing whatever, and he didn't pay any attention to us. Well, maybe a little. But I met Brian at the PCT 100 conference, which is a pretty exclusive conference. It's PCT does it every 2 years. It's all the 100 who make the list are invited, and I was invited as one of the speakers. And so I did my speaking thing, and Brian came up to me and asked me afterwards if I would consider helping him out, and I said absolutely. And we got together and started to work together and noticed some inefficiencies in his business and looked to help him with that. And really, pest control is a formula. There's no question about it. The pest control business is a formula. The question is, if I come to you and ask you to change your business, how much faith are you going to put in what I'm saying and do it?
Yeah.
Brian did it. And so let's welcome Brian.
Hi, Dan. Hi,
Yeah.
Donnie.
Hi, Brian. Brian, do you want to just, do you think Dan did a pretty good job there? Anything you want to add as far as the
Oh,
intro?
yeah. No. We've known each other in the industry for many years, and I've followed Dan and got to know Lynn on the phone very good. She was always calling me, and I didn't mind that at all. But yeah, that's a good summary, Dan. And in 2017, I was at this crossroads trying to figure out what's going on. My gross profit is not where it needs to be. My payroll's going through the roof. My leads are down, and I need to do something. And I was searching out advisors when I thought Dan Gordon, and I saw him at the PCT Top 100. And then we got together shortly after that. He did a complete analysis for me. I asked him, I said, Dan, something's just not right with my business, and I don't want it to get any worse, but I know I need to do something. Do you ever do like an audit, an analysis? He's all, yep, sure. Send me this. And about 3 days later was where it started. And talk about my eyes being opened. And just like you said, it's a formula. We had some of the ingredients, but we were missing a couple key ones. And I think that's what we're here to talk about today is getting those back on track.
Yeah. Well, thank you, Brian. And Dan, do you want to just talk through that? I think Brian did a pretty good job of talking us through where he was at in 2017 and kind of what he was looking for. You want to talk about kind of what you saw
Sure.
and kind of what you decided to do?
Yep. Okay. So what we saw was one of the things that we talk about, and I won't go into it here, but if you're interested, if you go to our website, you can see one of our videos on gross margin and how important it is. And what we saw was that Brian's gross margin was about 46%. We like to see 50 to 55%. So The
Hey Dan,
problem.
I don't want to interrupt you here, but just real quick, I mean, I know, most folks know what gross margin is, but just for the record, let's just
Going
define that
into
real
it.
quick
Yep.
when you say that.
So
Yeah.
so gross margin is revenue minus direct costs. Direct costs are everything that happens on the road. If we were a manufacturing operation, it would be everything that goes into the product. So we're making candy bars, it's the sugar, it's the cocoa, it's everything like that. That's your cost of goods sold or your direct cost. In pest control, it's technician labor, it's vehicle costs, it's materials, it's anything, technician uniforms, anything and everything that happens on the road. The reason it's important is because if I can show a 50% gross margin, and this isn't any business, that means that if it costs me $100,000 to run my office, including marketing and selling and everything, if it costs me $100,000 a month to run my office and I run a 50% gross margin, that means that in order to break even, I have to do $200,000 worth of work, right? 50% goes to the direct cost, 50% goes to the fixed costs. Once that is achieved, then I'm making money at a rate of 50 cents on the dollar. That's the beauty of pest control, because our gross margins are so high that once you get over that break even, you start to make money at a very high rate. In other words, if I double my revenues, I don't double my net income. I probably beat it up or push it forward by a factor of 5. Okay, that's why
Yeah.
gross margin is probably the single most important KPI that you can look at. And what we noticed was that Bugman was about 5% low. Okay, so what do we need to do? We need to reduce the direct costs, but how? Right, so we can reduce tech labor, we can reduce materials, vehicle costs, other. Well, our vehicle costs are committed, right? So all our leasing, insurance, and whatnot. Maybe if we could route a little more efficiently, we could bring some of the fuel down. But really, the two things that really matter are technician labor and materials. Okay, so that means that we can, if we can bring that tech labor down, and so you say, oh, okay, well, we just tell our technicians to take less pay and that they're overpaid.
Go faster.
Yeah, or move faster. And your technicians will be like, yep, you're right, I'm overpaid, boss. I'm gonna, we're gonna
Yeah.
do that. That ain't happening, right? So how do we bring that number down? Next slide. Okay. So what we do is we can, if we can increase our sales price, remember gross margin is revenue or selling price minus direct costs equals gross margin. If we can raise up that revenue, then we can raise up our gross margin, right? And that, okay, so let's go to our customers and tell them, you know what, we've been undercharging you and we need a big price increase, and that's the way that's gonna go. And your customers are gonna say, yeah, right. Okay,
They're gonna
so we
say
can't,
absolutely.
yeah,
Absolutely. What do you need? Yeah.
yeah, so we can't do that. So there's a couple of ways that we can raise up revenue. Number one is to be more efficient in our routing, but number two is to look at our service offering. So many people in the industry, growing up in the industry, had offered monthly service to their customers, or even every other month service to their customers and whatnot. And so what we looked at when we looked at Brian's business was we said, okay, by the way, what we were going to do is we were going to go from monthly to quarterly. And we did do that. And at the start, our labor costs went from 34% to 32%. So we were able to reduce that. Now, let's move to the next slide. Okay. And we were able to take our materials from 7% to 5%. Okay. So just the materials and labor, we made up that 5%. Okay. So how do we lower material costs? Next slide. Okay. Now, what we did was we said, let's go from a monthly service. The column, the third column is the prior year. So for the prior year, we did $533,000 worth of monthly revenue. Okay. And what we said was, well, let's, and 664 of every other month revenue. Okay. So what we said was, let's move everybody to quarterly. okay, we're going to increase our revenue per hour. In other words, if I was at $50 for a monthly account, I could go quarterly and probably not charge them 150, but maybe 125, because people in the industry do that, okay? So we did that with most of the customers. And as you can see, we went from 819,000 in quarterlies to 1.5 million. Okay, so we increased our revenue per hour. Did we sell more? No, but we moved our monthly clients to quarterly, thereby doubling the dollars per hour. This in turn decreases our cost as a percentage of revenue, right? We didn't move everybody because that would have been really drastic, but we moved a good portion of them and are continuing to do that. Okay, so basically what we're
Dan,
trying.
can I just
Yeah,
pause you there just for a second? Because I mean, I know there's going to be folks in this webinar who's like, well, we're already doing quarterly service.
yeah,
We're already there. But the principle here, yeah, I mean, and I know we're going to get into this a little bit later on, but at Triangle, we were at quarterly and we moved to triennial, right? It's not like it stops here. And I know there's some companies that do once a year, right? They go way off I don't know that I'd go that far, right? But at the end of the day, I think a lot of folks are just scared, right? They think, oh my gosh, there's no way I can go from quarterly to triennial. Customers won't stand for it. Or in the case, well, we can't go from monthly to quarterly. It won't work, right?
Yeah, the lesson is not that you need to go from monthly to quarterly. The lesson is that you need to increase your revenue somehow, whether it's more efficient routing. That could be the answer. You might not have to change anything, but you have to increase that revenue, understanding that there are competitive pressures, so you might not be able to raise your prices, okay? And you're not going to be able to tell your technicians to take less money. That's not in the cards, right? So if you look at in December of 2018, our average price per monthly service was $58.45, and I did 1,400 of them just in that 1 month, right? And my quarterly was $103. It was roughly twice that, right? And I did 680 of them. So let's go to the next slide.
Well, before you do that, though, and I think this is a critical point, when we talk about fear and people not wanting to do this, because I mean, this is in my mind, this is a genius strategy, right? Is trying to figure out how do I offer more value without having to make as many trips out to the house. And I think there's really two things to think about here, right? Number one is that if you got ants and I came out 50 times and the ants are still there, are you going to keep me? Am I doing a great service? The answer is no, right? I'm going to fire you, right? It doesn't matter. So it's not about how many times I service the house, right? It's about, can I control what's happening at the home with the least amount of stops, that the customer gets a quality service and I minimize the time that I'm out there, right? Because if I can do that, right? And so I think that's the first thing is that, and I think
by the way, at $58.45, you've got drive time, so you're probably only able to handle one of these an hour, right? So you're going to lose money all day. Now, if you were doing like an apartment building and you went from door to door to door at $58, that might work much better, but in this case it doesn't work. So if we go to quarterly, we have $103. Now if you go to the next slide, what we'll see is that we actually went, the monthlies that we kept went to $67. This is December of 2018, and our quarterlies went to $109. But you can see how the numbers of the accounts moved up significantly. Now, if you go to the next slide, I think this is the aha moment, right? So in 2018, I did 1,400 monthlies, in December of 2018, I did 1,400 monthlies at an average price of $58.45 for revenue of $81,830, okay? And I did 680 quarterlies at $103.73 for $70,000. Okay. In 2019, I dropped the number of monthlies from 1,400 to 912 with an average price of $67.54 for total revenue of $61,596. I jumped my quarterlies from 680 to 1,279 of them at $109. So my revenue is now $140,370. So what's my change? My change in revenue for that month Okay, I've done 488 less monthly stops. I did 599 more quarterly stops. I raised my average price by $9 on the monthlies and $6 on the quarterlies, but my revenue went up by $69,000. Now, if you say, okay, well, that's the month, let's multiply it times 3 months and see what happens. So now my monthly revenue, because it was down 20,000 for the month, is down 60,000 for the 3 months. Okay, and the number of stops went from 488 down to 1464. Okay, but my quarterlies, remember, I'm only doing them 1 month out of the quarter, right? So the number of stops stayed at 599 and the revenue was 69,833. Okay, so for the 3 months I had a $9,000 increase in revenue. Big whoop, right? However, I had 865 less stops to do. And you tell me if you can make money, reduce your materials and your labor with 865 less stops in a 3-month period, right? And so that's the math
that
behind
is the yeah, I mean, and that's how you get that gross margin under control. And so Brian, Dan's been doing a lot of talking here, and I want to hear your perspective on this, right? So I'm sure he came in and was like, okay, we're gonna make all these changes. Like, how did you feel about this when he started talking about this? What did you think?
In the beginning, he told me this right off the bat after my original analysis. We first adjusted payroll and we reduced payroll and we dove right into managing, by the KPIs. And I knew that was sitting out there. And so I called Dan and this was probably about July of 2018 or 17 to 18. And he and I talked and I said, Dan, I still, there's still something that's not, moving in the right direction. The needle isn't moving quick enough. And he said, move your monthly to quarterly. And I said, okay, what's that going to do? And he showed me a similar, concept. And I said, okay, I'm going to do it. And our leadership team set out for 90 days to have everybody converted that we could convert, retrain our thinking from a technician standpoint and go after it. And at that point in time, after the very first month, our retention rate was extremely high. Our retention rate, even before converting from monthly to quarterly, was very, very high. So I felt confident that our customers would stick with us, but I wasn't sure. It was a bit scary to, put it out there and think, okay, we're going to go for this. But it made sense. And here in Southern California, you can easily, manage the pest on a quarterly basis. So it made all the sense logically to me, but emotionally, I was like, oh, I don't know, that's out of my comfort zone. But then Donnie,
You're the only person that feels like that, by the way, Brian. Whenever we mention this to folks, you're the only person like, whoa, no, I'm joking.
Right.
It is a huge step for most companies.
And so we went for it, and it's and for 2020, we're even farther ahead now. That, and also Dan brought the concept to me that, the higher you have, the higher percentage of recurring within your business, the less hard you have to work toward that, fill in that funnel of new stuff. And in the beginning, I'm all like, tell me that again. And he would share with me. And right now I have a goal by the end of 2021, I need another 1.3 million in recurring, and our business will have 80% recurring. And that's a very healthy structure to get to. And because I've always been chasing, my 30 years in the industry, I've been chasing that new business, that shiny new big job that, and Dan's all, I have a sign right here and it says boring is good. And I was one of those ones looking for that.
Hey, I'm gonna hang that in an airplane because let me tell you, an airplane boring is good too.
Yeah, but Dan, I got to the point I had enough pain in 2017 where I wanted to head some stuff off, and Dan said, look at me like your own CFO, and so that's exactly how I consider Dan. He's our in-house CFO, and we go to him all the time on all kinds of little adjustments. And business has just never static. A business is never static, and it's always moving, but you've got to get laser focused. For us anyways, we had to get laser focused on our KPIs. I had to put a focus on to selling recurring. Our recurring is growing at a tremendous rate. And so I think, you know, between the two of you, Dan, you on the number side, Danny on the marketing and advertising side, Donnie, that has gotten us, you know, to where we're at today, hitting on all cylinders.
So I think one of the things that we noticed also is, okay, we're able to do this now. How do we get that next? How do we get those new sales or the new leads in? And so that's when I told Brian he should probably call Donnie and see what Donnie could do, and that's where Coalmarch came in and did their thing. So so Donnie, what kind of stuck out at you when you first started?
So it was interesting. And full disclosure here, Dan actually referred Brian to us, and I got a call from Brian. As you can imagine, I know everyone knows this about me. I love staying up late. I normally sleep in the mornings. No, I'm joking. So he's on the West Coast, I'm on the East Coast. Brian called me late one evening, and I was like, "Who's this guy?" And he was telling me about what was going on, and I could tell immediately. I looked him up on this, you know, I looked up his website. This is kind of what we saw. And just, I want to circle back because he had told me about some of the things you guys work on as far as getting your gross margin under control. And you know, Brian, before we get into the marketing side, one more point I want to make. It's a great goal about 80% recurring. What most folks don't realize is the more you focus on that recurring, the easier growth gets, because every year the level you start at is higher than the year before. And so it just doesn't take a lot to drive 10, 15, 20, 30, whatever the percent growth it is that you're going for. It just gets easier and easier the more your customer database is stacked with recurring accounts, right? And so it's definitely playing the long game. Sometimes it takes about 2 or 3 years, especially if you've been doing a lot of one-time revenue. And so a lot of times guys will be making tons of progress, but they don't feel like it, right? Because they're like, oh, well, my revenue's flat, or I'm down 5%. But if you start digging into the numbers, you realize, well, the recurring's up 30%. It's like, well, it's only a matter of time.
Here's the interesting thing, right? So, you know, some of the distributors and other manufacturers in the industry will get mad at me for this, but that's okay. You know, like doing insulation and termite repair work, and in California and Florida where you're doing a lot of fumigations, you have to do repair work. I get that. Bird jobs, if you don't know what you're doing, like a $100,000 bird job is very, very attractive. My gosh, that's the answer to all my problems this year. Oh, I'm going to do that $150 quarterly, really? Well, over time, that $150 quarterly, that's what's going to get you to the promised land, not that $100,000 bird job. I don't recommend that you don't take the bird job unless you don't know what you're doing, but keep your eye focused on that recurring to non-recurring. Yeah. And your recurring work is not big bucks. Mm-hmm. It's great gross margin, doing it over and over again, and doing it, you know. So
it's the flywheel, right? Jim Collins talks about. It's totally the flywheel. So getting back to getting back to Brian, when he called, you know, and I started asking him questions, there was a few things I thought immediately that stuck out in a big way. The first one was kind of his rankings. You know, we always say in our field, you know, if you want to hide a dead body, put them on the second page of Google. And, you know, rankings in of itself is not the only metric that you want to look at, you know, when it comes to how is someone doing on the digital side, but it is a large indicator. And one of the things that we saw immediately was like these really strong markets that Brian was in, he just was not ranking well organically. He had marketing that was working, right? But a lot of his marketing was not generated towards this recurring customer that we're talking about right now, this, you know, this pest control customer. And so he had a lot of one-time revenue. He had a lot of things that were pushing, but his channels, you know, for that target customer were not really aligned, and the timing on those channels were not happening when they should be happening as well. And so we took kind of a deep dive as to which channels he was on and which channels he was not on. And, you know, Brian, do you want to talk a little bit quickly about, you know, kind of where you were at with marketing when you kind of got in and you called us? And
Dan and I were talking, and we're looking at the P&L, and he goes, what are you spending on pay-per-click? I said, oh, not very much. I was told that doesn't really work anymore. And well, that's not what I've been told. And I was going in a different direction. I was right in the middle of getting our website redesigned. And that's when Danny said, give Donnie a call, and I did. And because I was under a different paradigm, that digital, pay-per-click was not the direction it was going, and that really was not the case. But again, that's where you stepped in. I canceled the website I was having redone. Got a better understanding of recurring and of the SEO part of the website versus the pay-per-click, and had a real good understanding. But there was also a lot of good referrals, Donnie. When I was at CO2, there was a lot of people that had already been using you and was where I was at that point in time. And so it made all the sense in the world to get on board and start moving in that direction. Now, coming up on 3 years later, I'm starting to really see the results.
Nice.
So there's really residentially, there's two types of marketing that works. It's digital and door to door. Door to door is a special talent and takes a lot of money to do if you do it right. Those are the only two, I mean, yeah, you're going to have branding if you're the oldest guy in the neighborhood and you put up a billboard and that makes you feel good, but that's not where you're getting it from. It's those two areas. And again, door to door is not easy. Digital, you can outsource it to an agency like Coalmarch.
Mm-hmm. And I would just say, I think probably when you started, Brian, it made sense, but relying on organic, but there's just so much left on the table. And if you, for whatever reason, the algorithm gets changed and you're not strong on the paid side, it is a fatal blow, right? And likewise, I mean, if you're all paid and you're not bringing up, some organic, I mean, that's going to cost you a lot of money. And so we saw that immediately, and we just like, hey, Brian, we're gonna kind of rehack here. And I told you something kind of unpopular. I know you just launched a new website, and I'm like, we're gonna do this again. And not to critique the site, I'm not gonna do that, but I just felt like we could do a lot more in conversion, and that's what we did, right? And the other thing that I kind of low-hanging fruit that I immediately got in on was like, we really didn't have our tracking down, right? We didn't know the total number of leads, we didn't know our full cost per lead, and we didn't know conversion rate. And so that made it kind of difficult to, it's like most things, right? Feedback is the breakfast of champions, right? It's like, if we're going to get better, we got to know. And so it was, number one was, kind of shoring up these holes that we had in terms of paid, making sure that we're strong on all fronts. But, the second part of this was getting the infrastructure in place so that we know, changes that we make, what kind of impact they have. Not just like, well, I think it worked pretty well, or our sales are up, or I can't attribute it back to whatever. Because in digital, things move very quickly. And as you can imagine, what is in this month may be out. And, not having that data, you're just very slow to change. And in that industry, I mean, it's all about change, right? It's all about riding the wave. And so this was the new site that we did. We put on our, we call it our pest selector here, and added a lot of good CTAs and kind of brought them into the fold. And, we also went to work on these organic rankings as well. And you can see in Anaheim, before launch, he was at 16, after launch, we're at 12, and now, he's at number 3, and that's a really strong market. This is going back from page, 3 now to page 1. And you can kind of see that in all of his major markets now. And again, I want to be very careful and not saying that, rankings is everything, especially when it comes to digital, but it certainly helps, right? I mean, it is a key component. The other thing is that, getting his channels lined up, especially, the big one was pay-per-click, of course. Getting him on Google local services, where he was getting an average of $16 cost per lead. I mean, it's like going big in those channels. And then timing those channels so that, I mean, in Southern California, you don't have quite the swing of a season like, someone in New Jersey would, or even in North Carolina, but there still is a swing, right? And there's still a time when you need to time that. And so, I mean, we specialize in pest control. We know what those seasonalities are. We know when you should be on a channel and what pest you should be pushing and what deals should be going. And so I think just all of that came together. When you look at it, a 49% increase in total leads year over year, it's just phenomenal. And a 60% in paid leads, right? When you got those kinds of leads, especially for the right kind of customer, it's not too difficult to grow. And, like most things, the more you pile into that funnel, the more efficient they get, right? So overall, when you look at the big picture, it's a 42% increase in residential recurring revenue, which, Brian, that's amazing story. I mean, obviously we can get you the leads but it just goes to show the quality of company. One of the things that we really depend on, at least at Coalmarch, is that we give them a lot of leads, but there's got to be a quality company to convert the sale and then, have the follow through. And you talked about it earlier, but your retention is just great. And this is what I feel like defines a great partnership, right? I mean, when we can provide a level of leads like this, and then there's a company on the backside that can really take care of the customer, then you see really good results. And so I just think that this is an amazing story, and I just have to congratulate you on all fronts. I mean, because to me, we can't do like the total transformation. I don't have a documentary that we could follow Brian all the way through, but if you could, he cleaned up both the efficiency of his business and he cleaned up the sales, and then he used that to continue to grow and expand the business. So congratulations and great job on that, Brian. I mean, it really has been impressive. And I know we're not sharing everything here, but can you just talk a little bit about kind of where you're at today, just big picture broadly, and kind of where you were at in 2017? Because I think for a lot of folks on the webinar, I think they can really resonate with your story. I think it's an important story.
Yeah, 2017, I was up at night. We were not profitable, barely breaking even. I knew internally that I started out 2017, and by May, June, and July, it was not kicking into any other gears. And that's when I contacted Dan. Shortly after that, when I did talk to you, Donnie, you're on a plane with a couple of your team members, and you're out here in a week or two. And we sat down, and it was so comforting to talk to another owner that knew what we were talking about. And so it takes a village, I say. It takes a lot of people, and I, throughout the years, have used a lot of advisors and consultants and people that know more than I do. I remember in 2005, I went back to talk to Chuck Steinmetz in Florida, and I said, Chuck, I'm just this little company out here in California. I really admire what you've done within our industry. Can I come out and learn from you? He said, come on out. And we sat down in his living room and just talked shop. And you know what? He said, Brian, what do you want to know? I share everything, because you know what? Most people never execute on it. And that always stuck with me. And in 2005, I was around 3 million, 3.5 million. And that always stuck with me. And then when I met you, Donnie, you were kind of an open book too. You were sharing things with Triangle and what's going on with the business. And a real defining moment for me was when I learned about Bobby Jenkins having a 92 NPS score. I said, what's an NPS score? I had no idea what an NPS score was. Came back, talked to my team about it, and I said, there's some way of measuring our quality. I said, I think we need to do that. And so we implemented our NPS a couple of years ago, and I'm proud to say that I think we're trending at about an 87 for 2020. I'm very, very pleased with it. I think I remember that Bobby was at a 92, so that's phenomenal. But one of the things I would say we always had was good people, team members, and good clients. But I really needed some help on the marketing and advertising and on the numbers side, and that's what I found from both PCO Bookkeepers and Coalmarch. But it goes beyond that, because we can all talk here on this webinar as to philosophies and do this and do that, but I love putting things into action and trying to see if it works or not. And one of the things that makes me feel comfortable with Coalmarch versus anybody else I've ever done pay-per-click with is that you guys have a dashboard, and I get to see everything real time, everything real time, and I know whether it's working or it's not working. Regular reviews, looking at it. Your team knows the pest control industry, all my pay-per-click companies in the past had no clue about recurring or ants or termites or rats or anything else. And so it was really refreshing to be able to, find somebody that knew our industry. Same with PCO bookkeepers. If I have a question on Pest Pack, I can call Dan and he knows right away. And he's helped shore us up. I think we've become a better company. I'm not trying to be the biggest. I'm not trying to be, have the most trucks on the road. What I want to do is I just want to fill our niche, people that want their ants taken care of, or their rats gone, or their termites eliminated. Like Dan said a little bit earlier, I had invested over $100,000 in an installation division, opened it up, and we started doing in-house installation. Well, little did I know that brought all our focus into selling installation jobs, doing installation, storing installation, damage claims, going through ceilings. Something just didn't feel right. And Dan just kind of laughed at me and said, "You don't need to do that, And I said, "No, I don't." And I came to my team. I said, "You know what? That's not our specialty. We still offer it. We can sub it out cheaper than we were doing it in-house. But I think as an owner, you get to these points in time and you got to say, what am I best at? And that's what I'm going to excel at."
Great, that's awesome. And again, it's such a great story. And Brian, thank you again for joining Dan and I. Again, I think your story is amazing, and I'm sure if any of our listeners were to reach out to you, you'd probably share some data with them. And I put some top things on here to implement if you're listening. I think the first and foremost, and Dan, you can add to this, but I think for me personally, when I look at Triangle, quite frankly, even Coalmarch is a service business no different than any other service business, right? Is you really have to manage that gross margin. That shows you how efficient you are as a core business. Now, you can still run the company in the ground by overspending in the admin side, but if you keep that gross margin nice and tight and you really manage it, and Dan nailed it earlier when he said that this is one of the key KPIs you really got to keep your eye on. I think this is the top takeaway is, number one, know your gross margin and track it, right? Know what it is.
Try to improve it.
Always
so best in class, 50 to 55%. Obviously, if you're using our firm, we give you the chart of accounts, so you would use that. Sometimes we'll work with firms that we don't work with. As long as the chart of accounts is showing that the direct costs are costs that happen on the road. So if you think about, how am I going to spend some money and where does it get categorized? If it happens on the road, not sales or marketing, but if it happens on the road operationally, that's a direct cost. So
the other takeaway I think from this, and some folks may be looking at this, if you're on monthly, consider quarterly. If you're on quarterly, consider triennial. But Dan did a great job of running through how just small little tweaks, 5% on a gross margin, massive numbers, massive, swing in profit. I mean, there's so much positive that can get from really looking at your service frequency and seeing if you can make it work. Again, I've seen companies who have went to once a year. I don't know that I'm willing to go that far out, but at Triangle, we went to triennial and we never looked back. And I can tell that story later, but I had all the fears, and I was worried that our customers are going to run off, and it just simply didn't happen. And that's our standard service and that we do today, and it works like a champ. And so I think that's another good takeaway from this webinar, is that if you've not taken some time to take a look at what you're doing in terms of service frequency, there's a lot of new technology on the market in terms of product. There's a lot of new techniques that you can use in terms of servicing. Really should consider, how can I, eliminate some stops and kind of keep my revenue the same, because it's going to do an awful lot for your gross margin and ultimately your profit. And then the last thing I would say, the biggest takeaway from this, is know your cost per sell and manage it almost daily if you can, and pay per click, right? Really shoring up any holes that you have. I mean, the fact is on the digital side, you cannot rank number one for every single pest and every single market that you service, and every, whether it be on the pest side or the market side, but you can supplement with pay per click. And so it's a great way to plug holes and to capture those sales that you may be missing out on. And so
And make
Dan,
sure
any
that,
other things that?
yeah, make sure that you know your numbers. We take on a lot of clients, and the owner will say, "Listen, I want to come up with a compensation plan for a salesperson or a manager or whatever." And then I say, "Okay, well, let me see your numbers. What's your what did this salesman sell last year?" Well, I can't really tell you what he sold, but
Yeah.
he's really good. Why is he good? Well, because he talks to a lot of people. So you got to have your numbers, and you got to understand what your margins are so that you can improve them. It's the only way. The beauty of our business is if you've been in this business long enough, you probably have a book of business that you probably could get away without knowing your numbers and still get by. But when the going gets rough, you need to know your numbers. In other words, you'll still make money, but you won't make it at the rate of what the best in class companies are doing. And as we move to the future, because of technology and whatnot, we're getting better and better at working on smaller improvements to our business, but we have to because the competition is getting more. And if we can't work these efficiencies into our business, we're going to get beat. So that's where we're at.
Well, Brian, I know Dan and I both are just so grateful that you came on the webinar with us and you're willing to open up and share. I think a lot of folks are really going to benefit from your story. Again, a wonderful story. Thank you again. Any parting words that you want to say? Any advice you give for folks that you think may be in your situation back in 2017? Or
Well, there's a lot of us in the industry that I think are willing to share and help each other. Through CO2, I've become a member of some peer groups. I love the industry. It's fun. It's a lot more fun when you're making money and you're going in a good direction and you're profitable. So I thank both of you for your support as far as being part of my team. And if anybody does want to reach out and contact me, they have my email or cell number.
Excellent.
thank you.
Thanks so much.
Thank you very much, Brian.
Thanks,
All right, well, I think this is going to pretty much wrap it up for us. This webinar, like we said before, this is going to be well, I say it's going to be our last one, but I was not very good about talking about COVID either. But just a reminder, this is going to be available on YouTube later on this afternoon once we get done. And big announcement, I don't know if everyone has seen it yet or not, but CO2 is going to be virtual this year. We're having what's called CO2 at home. The dates are going to be the same, December 1st through the 3rd. You heard Brian talk about it earlier. This is a great conference, not just because Coalmarch puts it on. It's one of my favorites because we get to hear from just top quality speakers, and we have the same plan for this year. So if you want to learn more about that or you want to sign up, it's coalmarch.com/CO2. Be more than happy to have you. And other than that, of course, me and Dan, we're here to help if, any kind of bookkeeping issues, services, M&A. Dan does an awful lot. He's very knowledgeable in the industry. And on the Coalmarch side, of course, we just want to help grow your business so that when you go to see Dan and eventually exit, you can run away in a good position.
If you need help filling out your forgiveness for PPP, we're doing that. So let us know. If you want to understand what the value of your business is, you may not want to sell right now, or you may want to. We are heavily involved in that. In the last year, we did maybe 18 months, we did about $150 million worth of transactions, and it's a robust market, and we're able to get the best value. So give us a call.
And with that, we're going to close this out. Brian, thank you again.
Thanks
Dan,
again,
always
Brian.
a pleasure.
Yep, thank you.
We'll see you next time. Take care now.
See ya.
All right, bye-bye now.